So, morning mates. First of all, my humble apologies that I was absent from YouTube from almost 3 weeks. Because you clearly understand that there is a lot of action which is going on in our hedge fund, and God willing, now we have launched the booklet of the hedge fund also to effective today, which is live. And more importantly, I was focusing on the app. As you very well understand that our app is coming, and on 20th of June, the first phase of the app is coming. So precisely speaking, taking another 1 minute, our app would be launching on 20th of June on Apple. And around by end of June, we would be launching the same on Android phones. Somewhere closer to end of July, we would be launching a desktop version of our app. And first we would be launching on Mac, and then we would be launching for Windows. And somewhere by end of September, we would be launching the iPad version for US and European bankers. And God willing, if everything go well, then by December 2020, we would be launching our dedicated version of the YouTube, whereby Treasury Consulting would be able to upload more than 100 GB video on that YouTube. We will continue to be on the YouTube, but we would want slowly in another couple of years, like before 2022, we would have our own YouTube channel. So we want, our own systems in place. That is the reason we are coming up with the app. As you know that Treasury Consulting expanded very fast in this lockdown, and in this lockdown we operated our hedge fund, and hedge fund include a lot of activities. One of the things which we started is the Sheetal Academy, and Sheetal Academy is basically a training platform. So many people are asking a very simple question, that what is the difference between the hedge fund and the Sheetal Academy? The difference between hedge fund and Sheetal Academy is that hedge fund includes trading and training both, while Sheetal Academy is dedicatedly designed for trainings. It has nothing to do with the trading. And one of the new schemes which we wanted to launch, or the school which we wanted to launch in the Sheetal Academy, is nothing but the Nifty and BankNifty school. I do not want it to name, but you know that there are many channels we have on the YouTube, those who are giving predictions and multiple stuff about Nifty and BankNifty every day. I do not want you to name them, but you yourself know that these channels, in fact, none of the channels is able to tell you the right fact about Nifty and BankNifty. Example, negative put and negative call. If you open YouTube and type negative put and negative call, I challenge that any channel even dare to raise this point. In this regard, the company has decided two things. Number one, in a Sheetal Academy, we would definitely be launching our Nifty and BankNifty school. The preparations are going on, and hopefully by end of next week, the whole architecture of Nifty and BankNifty school would be ready. And every day, in fact working day to be precise, we would be launching one video on the YouTube, either shoot it from mobile or from the full-fledged camera, wherein we would be talking about our opinion on that day about Nifty and BankNifty. Now, when I give my opinion about Nifty and BankNifty in the last week, then I strongly feel that it is an operator-driven market. Being an operator-driven market, it is very difficult to predict Nifty and BankNifty. And again, I'm saying the same thing, that people should think 10 times before entering into this market. So let me start from summarization. When the coronavirus started, Indian markets fell sharply. Then all of a sudden, you can check on any graph, 23rd and 24th March, something happened when the stock prices started tracing up. And it was mutual funds who came in the public domain as a domestic institutional investors and started investing the public money in the shares. In fact, one of the data comes in public domain clearly suggests that mutual funds giving no return from the last 5 years. And God knows what mindset people are carrying in their mind, whereby they still believe that mutual fund would be able to give the basically equity mutual fund, precisely speaking, would be able to give the return to investor for a longer period of time, when at the same point of time debt and debt based mutual funds are generating consistently 7 to 7.5% return on a yearly note. Anyways, I know that sooner or later the euphoria in the mind of the investor would over, and some data also suggests that the investments done by people in the systematic investment plan reduce considerably. And credit has to go to the Franklin Templeton also, who made sure that six scheme shut it down, and now people are losing trust on the mutual fund. In fact, according to the public statistics, there are multiple credit risk fund we have in India, those who transferred the illiquid securities from the credit risk fund to the other portfolios. And guys, you would be surprised to know that, we are transferring illiquid securities from credit risk fund to other securities without even knowing that what would be the impact of these on the investors of existing securities. But rest assured, this can only happen in India, and stay assured that media is going to say anything about that. When I speak about Nifty and BankNifty, then on the TikTok and as soon as our app is come, I would like to make one thing very clear, which I'm clearing on every day, is that this is definitely not the market for the young investor. If any young investor without having any experience is entering into this market or thinking that he or she would be able to enter into this market, then it's a biggest mistake. Because this market is even not for experienced investors, so young investor forget. Now, what are we facing in this market is that this market is facing negative put and negative calls. Of course, in this video, I would let you know a small part of negative put and negative call. But one thing which you can clearly see in this market is that operators are controlling few shares pretty well. And in fact, there are multiple corporates in India, I do not want it to name, that they are selling the stakes of their company, but their share pricing are rising up. So these operators are pretending in such a way that if a big conglomerate is selling stake in their company, then it means it's a good news. Come on guys, it's not a good news. This is how it works. This is how Indian market works. It was always an open driven market. I strongly feel that in this market, non-banking financial corporation stocks will take a hit by another 20% in another 2 weeks down the line. I think RBI moratorium, extension of the moratorium period is the last nail in the coffin. Having said that, the collection cycle to fall, and the collection cycle to fall sharply. According to an estimate that came in the public domain, that Axis, SBI and other banks, they are facing around 26%, closer to 25% averagely speaking, customers are accepting for moratorium period. In case of Bandhan Bank, the same moratorium period extended to 71%. 71% means 3/4 of the loan book. It means 3/4 of the loan book in case of Bandhan Bank is looking for a moratorium period or benefit of the moratorium period extended by RBI. So I strongly feel that the non-banking financial corporation shares will fall another 15 to 20% in 2 weeks down the line. So I really don't think that there is any need when we need to be worried about, or we need to be too much eager to buy shares of non-banking financial corporation. Having said that, we need to understand one thing very clearly, that we need the list of non-banking financial corporations, which is NBFC. We need to segregate this list into 4 quartiles: quartile 1, quartile 2, quartile 3, quartile 4. Now quartile 1 means the top NBFCs we have in India, followed by the quartile 2, quartile 3, quartile 4. Quartile 4 is the weakest NBFC which we have. Treasury Consulting Group hedge fund feel that another 2 months down the line, because coronavirus is here to continue. We all know that. In fact, today when I was watching the Indian media during my dinner time, I got to know that the total amount of cases in India is 1.32 lakhs. in Maharashtra alone crossed, I think, 50,000 cases. I need to check again, but it was 50,000 cases. And out of 1.32 lakh cases, on an average, 4 to 5,000 cases are coming every day in India, which means that probably another 15 days from now, which is by 10th of June, roughly I can say, by 10th of June, India would cross the 2 lakh cases, and India would be far ahead as far as the official statistics of cases are concerned, even if we compare with China. Though we all know that Chinese numbers are never be a trustworthy numbers, and Chinese press are always subdued by the government. But that's a separate thing. So if we go with the existing run rate, which is coming in the public domain and by the government sources, by 10th or by 15th of June, India would have over 200,000 cases of coronavirus. This would definitely impact the economy, and I'm sure that government is not in a position to let this grow to a number whereby it would next to impossible for the government to manage that. What I see that Prime Minister may come in the public domain himself or via an agency whereby they will put the lockdown. And there is one more news which is coming up, that even if government go ahead with the lockdown again, like lockdown 1, this might not have any denting impact on the coronavirus cases. But I don't know what would happen or what would not happen. But one thing I know, if I go with the existing run rate, then by 10th or 15th of June, the total amount of cases is much more. If I go with the Hindi media figure of 1.32 lakh right now. If I link this number with FMCG sector, whereby a report came of Nielsen, which state that the total FMCG market in India is around 4.34 trillion, which is around 4,34,000 crores. Out of 4.34 trillion market, in April month only, the market contracted by around 34%, which means that out of 4.34 trillion, around 34% is contracted only in the month of April, which is closer to 1.12 trillion. And God knows what would happen probably in the month of May, in the month of June, when the figures will come. I don't know, because I have the figures only of the month of the April, and that too by the study by the Nielsen, right? I feel that in another couple of weeks, FMCG stocks will come down, definitely. Non-banking financial corporation stocks will come down. I really don't think that it is the right time to hit non-banking financial corporation. I think we need to wait and watch. Well, across the globe, and the credit has to go to Warren Buffett in that regards, because he came in the public domain and said that his company Berkshire sold almost all aviation stocks they hold, and now it is a turn of the banking stock. And according to the public news, the Berkshire sold major stake in the Goldman. I fail to understand that why Berkshire sold in Goldman, because Goldman is a pretty strong investment bank. And Goldman and JP, I think, did fairly well in this recession. They did fairly well in this recession, but why they sold majority of the stake in the Goldman, I really don't understand. The day Warren Buffett started selling in the bank, we have seen that globally the banking shares are under recession. In fact, in India, the banking shares are losing. Just like IndusInd Bank is trading at 330, HDFC is trading around 840, Royal Bank or RBL, Ratnagar Bank is around 106, your Bandhan Bank is around 215, is around 200. So every banking stock is coming down. Non-banking stocks are further coming down. So stay alert, guys. There is no point taking aggressive positions in the banking stock. Of course, no one in the whole globe knows the bottom. God knows, God willing, Tuesday, some pharmaceutical company come in public domain and said that I got the medicine. So the market would move like that. We have seen that in case of US, when one of the companies came in public domain, I think Marcona, something like that. And when this company announced that their tests are running perfectly well, the Dow Jones up on the same day by 1,000 points. So no one know the bottom. Maybe any one of you would have a difference of opinion that SBI is at 150, it would come down to 120. Of course, I also feel that it may come to 120 the way we're looking right now. But one news from here, they will make the stock market up. Neither you know that news nor I know that news. So that is the biggest point of conflict which I am having. About the oil stocks, I strongly feel that oil stocks are doing fairly well, and Reliance is of course always an exception in that regards. But unfortunately, Reliance not been able to maintain the top level of 1600. But after every 2-3 days, some form of Reliance information coming, like this time another company bought a stake. It was a lot of different Silver Lake and all, KKR, they are buying stake. Reliance also started advertisement about JioMart. Reliance also started advertisement about 5G. It means that they are very eager to roll out their 5G operations. And I think Mr. Ambani is in a plan to convert Reliance into a net zero debt by March 2021 by selling respective stakes in Jio. I don't know whether this vision will come true or not, but one thing I know that Reliance, if not be a zero debt company, but would be a minimal debt company by 2021. So Reliance at 1400 looks okay to me, but the gestation period is 1 year. If you are able to take Reliance at 1400 and able to wait for 2 years, then I think it's not a bad show. I think last time also, pre-coronavirus, there were talks that Jio is looking for IPO. And I feel that maybe Mr. Ambani is waiting for the right time to come and he would do the IPO launch of Jio, probably by March 2021. The Reliance is not a bad bet. To cut the long discussion short, I strongly feel that Nifty is testing 9,000 once again in the coming week. Of course, it would be our operator-driven market. We really do not know till what extent operators would be able to save Nifty from breaking 9,000. They tried very hard last week and fortunately they got the success also. But this week we need to wait and watch till what extent they would be able to get this done. About BankNifty, I feel that BankNifty will break 16,500. The reason is pretty clear that worldwide banking stocks and non-banking financial corporation stocks are facing heavy heat. So BankNifty I see would touch 16,000, that I'm sure of. More important thing is that few shares will definitely perform well, and pharmaceutical stocks will do definitely well. There is no doubt about that. I feel that pharmaceutical stocks will do well, no doubt about that. This all in this week, Nifty and BankNifty. Keep watching Nifty and Net Nifty. I think it's pretty interesting, and every passing week makes this war little interesting. Let's see how this shapes up. And this is the beginning of the Nifty and the BankNifty by Treasury Consulting Group, whereby at the end of the day, I come in public domain and speak about Nifty and BankNifty. I assure you, when we meet tomorrow, I would be touching a very important topic, which is negative put and negative call. In case you wanted to have any information about our hedge fund booklet, our trading groups, our Sheetal Academy, anything, you can directly WhatsApp me 9899242978. 9899242978, and please wait till 20th of June. Our app is coming and we would be one of TikToks. Rest assured, have a good time.